Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Tuesday, July 27th. Great to have you here with us once again. I'm your host, Jesse Allen. Thanks for joining us here today. MarketTalkAg.com is our home on the web. You can find us there, MarketTalkAg.com. All of our streaming sources for Spotify, Apple Podcasts, iHeartRadio, Google Podcasts, and more. Wherever you listen to us, make sure you find us, leave us a review. It's much appreciated. Make sure you subscribe so you get all of the shows and all of the updates that we release each weekday. A lot to talk about in the grain markets and the livestock trade here today. Let's bring in our good friend Brian Splitt with agmarket.net. And Brian, good afternoon to you, sir. Great to have you back on the show. Look at this grain market today. What happened? We were doing really well at the open. We saw prices shoot up, and then it just seemed like we took some money off the table here today. What are your thoughts overall with what happened in grains today?
Well, I think you said it best at the end there. We took some money off the table. We had the crop conditions released yesterday afternoon. That had both the corn and soybean markets gap higher, so we opened above yesterday's highs. Those gaps were closed by the time we woke up this morning, but we were still sharply higher shortly after the open. And I think a lot of it was we just simply hit some technical areas, and we hit that early in the morning, knowing that the midday models were going to come out. So it was probably one of those things where if you had bought it, corn, for example, when you look at the high we made on July 1st, which was the session right after the quarterly stock and acreage report, which we were limit up on that. Then you have the high that was made last week. And that was the high where we nearly filled the December corn gap. We got to 573. The gap fills at 73.5. So if you draw the downtrend from those two highs, we went right to it on the high today in December. Same thing in September, right to the downtrend. And so I think, that was good enough for anybody that had already bought it to say, hey, let's take some money off the table here and see how the midday models come out. Similarly in soybeans, when you look at the rally that we had some highs last week coming out of the weekend, made right shortly after the open at 14.18 in November beans. The low yesterday was 13.32. So the high this morning, it wasn't at a downtrend or anything like that, but it was 62% retracement of last week's highs to yesterday's lows. So I think both markets kind of went up, hit a technical area. You saw profit taking, and then there really wasn't anything late in the session to bring us back up to those highs after the midday models came out.
Let's look at those midday models a little bit, because obviously that's the big story we're watching in these markets and its influence right now. And you and I were chatting before we jumped on air. You kind of threw out the word ambiguous a little bit. It just seems like we can't get a really solid handle one way or another on if this forecast is bullish or bearish, Brian.
Right. I mean, it's dry, but it's not hot. It's hot, but there's rain, right? I mean, you're just not getting that solidly bullish or solidly bearish forecast. Yesterday was all about, hey, we think Iowa could get some rain, and then yesterday's models kind of pushed it south, and then we get the crop conditions that came out, and that had the market jump. So now we're looking at the potential of rain coming back into Iowa, and so that's this is the ups and downs of the weather market in the very biggest of pictures. When you think about where we are and where we continue to trade, we're smack dab in the middle of this range for corn. And so I think one of the most popular positions in our book right now is looking at being short straddles in corn, whether it's straddles that expire at the end of August. I think we've got some straddles that'll expire late September, and we've sold straddles that'll expire with the December actual option series that'll expire late November. A lot of premium to be had out there. The short dated ones are getting to the point where maybe they're going to be a little bit more of a liability than an asset with the devaluation that we've seen in the last week and a half, 2 weeks. I feel like once these straddles get close to 40 cents, then it's probably worth taking those off, because a limit move in corn is 40 cents. So you get one limit move in one direction or the other, and you're going to wish you weren't in the position. But some of these October and December options, again, if you feel like we're in a sideways trading range and we're going to continue to see selling when we get to the upper end of the range from the Eastern Corn Belt, and then we're going to have enough concern about areas where it continues to be dry and stressed, that we're going to see support at 5. And I think that's going to continue for a little while.
On the soybean side, I know we've seemingly have had trouble once we get to this $14 level here the last few months, really all year it seems. We might break through it for a little while, and then we hit these technical resistance levels, and we just can't get past that. We seem to always fall back after a few days maybe of trading. I know we're holding that front month contract above 14 here today. I think the close was 14.18 and a quarter, but what are your thoughts in the soybean market and that thought of we just can't seem to hold over this $14 level?
Well, I think the market is not in the mindset yet that we're going backwards on yield, but it's not in the mindset yet that we're really adding yield. And I think that's why we keep, finding ourselves in this 1350, 1360 area. When you think about the lows that we made coming out of the 4th of July weekend, and we were down nearly $1 that day, we went right to $13, and then we held it. And then when we rallied, we went right back up to 14.18, and we couldn't stick over 14. So I think this market right now is by and large a $13 to $14 market. But look, Jesse, we know that 1 bushel in soybeans, adding it to yield or taking it away from yield off of the trend line number is going to have a huge impact on price direction. So this market's going to, be volatile over the next several weeks. We're going into August as we're going to be making the bean crop. And the USDA on August 12th will give us an assessment of corn yield. I don't expect them to change bean yield quite yet. But that's another one where, they're using a 179.5. It's the trend. Everyone knows it's 3 bushels more than we've ever actually grown in real world application. And so that's, I think, where a lot of the volatility is coming from there. You've got some groups saying it's trend plus right now. You have other outfits saying, how can we even get to trend when we have the type of concerns we have about the northern plains, and just took rain out of Minnesota's forecast. So this is the struggle we're going through right now, and that's why the market's volatile, but it keeps going sideways.
Well, you bring up the northern plains, and 25% almost of the nation's soybean acres reside in the Dakotas and Minnesota. And I mean, you look at those crop ratings for Monday, Minnesota falling 7 percentage points in the good to excellent category to the lowest since 2003. North Dakota sits at the lowest on record for this week of the year. I mean, I think I'm with you in that camp of the trade maybe is just not seeing that come into the trade yet, but uh, the concerns are out there, Brian. I mean, and we're starting to really see that with some of these private crop tours that are going to be starting up here as well.
Yeah, so we're going to start getting a little bit more in-field data as we get into August. We've got a major crop tour that will be coming in August, and we'll have the western leg of that tour is going to be a high priority to really figure out how bad the crops are in the areas that have continued to be stressed. It's no secret that the Eastern Belt's going to have some tremendous yields. We're looking at record crop potential in Indiana, absolutely record crop potential in parts of central southern Illinois, parts of Ohio. But this whole crop condition thing, it's so hard because you can have you compare good to excellent ratings of a state one year to the next year, and it's really hard to say, is the crop, are the ratings really indicative of the state of the crop? You look at even this year comparing Illinois ratings to Iowa ratings, and just recently, I think it was last week or the week before, Iowa was better than Illinois, and now Illinois is better than Iowa, and yet we're talking about how good how good Illinois is, and how much concern we have, especially in Northwest Iowa. So what do you make of these crop conditions? For me, I just try to follow the direction they're moving. So it's hard to compare them to previous years. So I think it's just, hey, where were we a couple weeks ago? Where are we now? And which direction is the crop really going?
On the wheat side, specifically, I know spring wheat, they have the tour going on in North Dakota right now, the Wheat Quality Council, and I mean, we just talked about crop ratings, and obviously we have to take it maybe with a little bit of a grain of salt. At some points, we'll get some confirmations, I think, of that spring wheat crop, but we know that it's in pretty rough shape there in the northern plains, and I have to think that once we get some confirmations in the field, that's going to give us some bullish momentum, I would think, in this spring wheat market. And, looking at Chicago and KC wheat as well, an okay day today, but those markets seem to be holding fairly firm as well, Brian.
We are, you brought up KC wheat, the September contract. Last week, one of our messages for growers of hard red wheat, if you still had wheat that was not priced, again, if you want to have it priced before you start your corn harvest to make sure you have room in the bins, that 660 to 670 area has just been a really tough spot to get through. We did get through it when we made the move up to contract highs, but that was maybe a 3-week event. So by and large, the 660 to 670 area has been really the upper end on hard red wheat. So again, if you're a producer and you have some bushels that you want to have marketed in the next 30 days or so, you might want to be looking at that area, and if it gets there, make a move. And I think this is one of those things where with global stocks where they are for corn, soybeans, and wheat, a lot of producers are saying, you know what, I'll make some sales, and I'm going to go 6-9 months out with some options and make sure I have something in play, because what's the South American acreage going to look like? Everybody's assuming we're going to have these record bean acres, but let's not forget they had a drought on their second crop corn. They're importing corn from Argentina. Are they going to go gangbusters on bean acres, or do they need to get some more corn in the ground? So these are all things that are going to be worked out here over the next several months. But I really think that where the world stocks are right now, we're going to have a good crop, and we're going to have a lot of potential for some good marketing over the next 8, 10, 12 months.
And I think as we move forward here and we get some of these different stories in the next few months, it's really going to kind of clear up the water, so to speak. But I think we've talked about this many times. It always comes back to making sure you're disciplined and using some of the strategies that are out there at your disposal, some of which you mentioned, Brian. It just makes sense to not let emotion take over with just how volatile things are.
Yeah, I mean, it's try not to force yourself into decisions. Try not to put yourself in a position where hey, there's a report all of a sudden and we're at the low end of the range, so now I'm going to overpay for puts. If you want to buy puts, then try to get that type of thing done when we're at the upper end of the trading range. I can tell you right now, I mean, the line in the sand for December corn is $5. We've been saying that for the last several weeks to months. And actually, when you look at December corn, we made the contract high in May, then we made that $5 low at the end of May. We've been trading inside of that May monthly trading range ever since. So again, this is the definition of consolidation. The market just doesn't know which way to go quite yet.
Brian, I want to make sure I leave us enough time to touch on livestock here today. Cattle, it seems like feedlots are just holding out for higher trade here, looking to find some better numbers out there. We had a really friendly cattle on feed and cattle inventory report Friday, but we come back in here today and we kind of backed off a little bit, maybe a little bit of consolidation in cattle here today. What are your thoughts there?
Yeah, like you'd mentioned, we had the cattle on feed was friendly. When you look at cold storage and the amount of protein that's in storage versus year ago levels, we've got all that going for us, and we came out of the weekend strong. But will the cash market support it? When you look at where the June futures expired at 122.50, so right now the August contract is really close to that. Is the cash market going to support the market going higher from here? That's a question that we have. We bid off quite a bit yesterday after that bullish cold storage and made some new highs today, and then backed off and closed a little lower. So we'll see if maybe this market doesn't kind of retest where the market was before those cattle on feed numbers came out. But all in all, I think the market is very well in tune with the idea that the on-feed numbers have been something that is of concern, and that's very evident when you look at the February 22, April 22 live cattle contracts. We've been making new contract highs over the last couple of months here, so those back-end contracts have been very strong, and I think we're pricing in this on-feed issue right now.
On the hog side, real briefly, we kind of been consolidating a little bit in hogs here, it seems, the last couple of days. But I'm curious your thoughts on like that October contract, 92.52, August still at a premium. That's a front month, but just looking at this hog complex, Brian, what are your thoughts on where things stand right now and some of that spread between, say, the August October contract and then out to the deferreds?
Well, we've seen it happen in the grains, and the fund manager has continued to hold long positions, and we've seen these time frames where they say, let's go ahead and exit some longs in these nearby contracts and go ahead and roll some of our length into some of the deferred contracts. So that's been a feature here back and forth. We know that from a flat price perspective, we still have some gaps above the market from when we had made our highs, and those highs were made in about mid-June as we were approaching the end of the second quarter. So these are all still potential upside targets that we may want to go back up and fill. And so as we progress here, we're going to be watching, the price of pork in China. We're going to be watching the crush margins. So if China has good crush margins, then they're going to buy U.S. beans. They're going to go ahead and they're going to use those soybeans to crush into meal and oil, and they're going to feed the hogs there. Now, if the crush margins aren't good, then we're going to see a concern about Chinese soybean demand. And then that makes it likely that instead of crushing beans and feeding their own hog supply, they're probably going to import the pork instead. So these are just things that we need to be mindful of and keep a close eye on as we get through the rest of the quarter here and move into the fourth quarter of the year.
Brian, outside market wise, and that's those markets' impact on commodities. I know the Dow taking a bit of a breather today. We got some record highs yesterday. Crude oil taking a breather too. Any thoughts on the outside markets and their effect on where commodities are at right now?
Well, you had mentioned, we just made a new fresh high in the Dow futures. We closed over 35,000 yesterday. A little bit of a breather today. A little bit more pressure in the NASDAQ on the tech side of things. There's been some talk about the tech market in China at the lowest level since inception. So that's a bit of a concern. But really, one of the things that is still a major influence, and it hasn't been lately, but it could creep back in. We saw a taste of it last week when we had that sharp move lower in the energies and the equities. But COVID, I hate talking about COVID. I just wish I didn't have to even say it anymore. But bottom line is, the CDC is now saying, hey, if you're in a school, you're going to have to wear a mask, whether you're vaccinated or not. So we're getting mixed messages there. CDC is also expected to say that everybody needs to go back to wearing masks if they're inside. So they haven't made that announcement yet. But, we're really wondering what direction are we trending right now? We had people getting vaccinated, getting their both shots. Of course, there's holdouts that aren't getting vaccinated. And I guess if you haven't gotten vaccinated at this point, maybe you're not going to unless, the policy becomes a little bit more forceful. But, cases are on the rise. Are the deaths going to increase as the cases do? Do hospitalizations increase as cases do? And unfortunately, it's going to take a couple of weeks between when we see the cases go up and then the outcome of that. But that's still something that as we move into fall, I mean, frankly, who knows? We could go right back into seeing lockdowns in several states. And I think that'll have an impact on the equity market. That'll have a huge impact on the energy market. And that all of that's going to spill over into the rest of commodity land.
Brian, great insight as always. Any final thoughts or anything you want to reiterate for us today?
Just again, we talk about this, I think, every time, Jesse. The market's going to be volatile. You're not going to know where it's going day to day. Be mindful of where you are with price. Stay on top of what you feel like your production is. That's what we use our app for. We'll update our assessments on yield potential, keep track of our sales, know where our break evens lie. And that's really the best way to do your marketing instead of trying to figure out where the market's going. You're not going to figure that out.
And I know you mentioned the app. Folks can find that in the App Store, the Google Play Store, and they can also find a lot of information on your guys' website, agmarket.net, and reach out to you or anyone on the team if they need some advice, can't they?
That's right. You can reach anybody in the agmarket.net team at 844-4AGMARKET, so 844-424-6758. You can reach me directly at 815-665-0463. And my Twitter handle is @BJSplitt.
And you can see that down in the scroll on the bottom of the video. And of course, we appreciate the time as always. Brian Splitt with agmarket.net. Thanks for joining us today, my friend. We'll talk soon.
Thanks, Jesse.
Brian Splitt with agmarket.net. Here on today's edition of Market Talk for this Tuesday, July 27th. Find us online, markettalkag.com. I'm your host, Jesse Allen. Have a great afternoon.